Okay, so back to the graphic, we have the thin side of the market, the thick side of the market. So, question here, would selling or buying 50 grand move the market more? Let's have a look at what would happen. I come in and I sell $50,000, I put it in the market, boom, what happens? Absolutely nothing. Why? Because we have 2,000, this is just a completely fictitious number, we have $2,000 of this instrument available at that level. So price, my order is simply absorbed into here. So now there's 150. So for this price to go down, someone else has to come and sell for an additional 150 grand, which will move us down, let's say 1 pip or 5 pips or whatever. In contrast, to this, where we have a thin side of the market, and here we have smaller pockets of liquidity. These are above price. Remember our American dollar, Japanese yen chart? Price was going up. Why? Because they have much smaller liquidity available above price. So these big orders simply consume it. They buy it up. And this is referred to as slippage. Has anyone here heard of the term slippage? Where you have a quote in the market, you buy, and you realize that, damn it, I got a really, really bad fill. I got a very, very bad price for what I was trying to buy. You buy it, you have you go into the shop, you can see that this costs $5. You buy it, but when you go to the cash register, it's $6. That's like, what's going on? That's essentially slippage in the financial market. And so this is why it's so important to transact with market makers who have good liquidity. You can check this out by seeing who's providing the liquidity. There are some really good retail brokers out there that have good liquidity providers, and there are others that have very, very questionable liquidity providers. Anyway, so this is one kind of graphical representation. We'll have a look at another one here because I think this one makes it slightly clearer. So this is kind of this refers to, here we have, this is open and this is closed, and this is one period of market time. Okay, so let's go back to the chart. I'll just show you what that means in reality. We have this bar here. So this bar, it opened here, that was the O, and it closed here, that was the C. The wick above, this is the high, and the wick below, which there is none, this is the low. So we have a few different values for each bar. We have the open, high, low, and close. Okay, so this is essentially representing what we saw on the slide, just on a chart. I'm going to move over to that. Yeah, this is exactly. This is an hourly chart. Okay, if I click on this, then we move from 1 hour bars to 4 hour bars. So now, from the time that this bar opened to the time it closed, 4 hours have passed. If I go to the daily chart, this is the beginning of the day, this is the close of the day. Okay? So if we move back here, so we have the day opens, price moves in, and what does it do? It seeks liquidity. It has to find liquidity in order to move. If there is no liquidity, nothing is going to happen. Price will move sideways. There has to be willing buyers and willing sellers in the market. And there always is in the FX, because everybody is buying and everyone is selling. A lot of people are buying and selling just to do business. A lot of people are going on holiday. The people who are exchanging our euros for rupiah, they have to buy liquidity so that they can sell it to us as customers. And so it opens. What does price do? It's looking for liquidity. So it goes higher, it finds a little bit of selling pressure here, and it goes down. Why does it go down? Because the selling here was big enough to consume the micro pockets of liquidity here to the downside. So it eats through those. They're gone. But here we find the big one. Price comes here, we fill an order. There's a lot of buying interest. What does that do? It turns the price. The price flicks up and it starts eating away. Consume. Oh, here's a big one. Here's a big one. Stop, and so on and so forth. So price comes down here. There are 300 units of this liquidity available. Price touches the edge of it. We start filling orders, and this filling of orders, what does it do? It causes price to go higher, like we saw previously. Price wriggles higher. It goes up here. We had a little bit of liquidity here, but essentially, the big institutions are buying here. The retail traders are buying here. We have some profit taking maybe here. Price pulls back, hence the pullback, and then the big institutions, they start buying in anticipation that price is going to move away from the thick liquidity and move through the thin liquidity, which is to the upside. So this is actually a graphic representing the American dollar Japanese yen chart that we saw on the previous page. And it's absolutely beautiful to watch. If you go on a 1 minute chart and you just watch how price does this, you can see it. It's hypnotizing. And it's very therapeutic as well, if you're into that kind of thing.
Supply and demand is driven by the real economy. Like as you said, vacation, just to understand the vacation, company that needs to buy 5 containers, Japanese company like 5 containers, and this is the real economy. To me it seems that only small portion of the total volume that flows.
Yeah, I mean, if you look at the Bank of International Settlements, they have a lot of really good information, and every couple of years they put out like a big piece where they crunch the numbers. And in 2016, I think it was 18% of the 5.1 trillion that was speculation, institutional retailer speculation. 18%. 18%. Yeah, it's not a lot. It's not a lot. But 18% of I mean, that's over $1 trillion. That's a boatload of dough. But these numbers differ. I think in 2013, when the same documentation was formed by BIS, I think it went down 1.4 trillion. So it was 6.5 in 2013. It went down to 5.1 in 2016. So huge numbers, enormous numbers. Does that make sense?
Are these patterns that work on in a micro way though as well? Is it pretty much, if you've got your $100, are you pretty much seeing the same pattern?
You're seeing the exact same thing. Yeah. Exact same thing. It's very, very fractal. I mean, I'm sure everyone here is a kind of, you kind of look over your child's shoulder. What are you playing? I just look at this cool Fractal app, and you keep zooming, and it's the same stuff that's going on over and over and over and over again. And so the same applies here, where you have patterns emerging on the daily or the monthly chart. So this is a daily chart, okay, and this kind of looks like this. There are very, very characteristical patterns for the movement of price on this chart, but they're identical on this chart. So the same stuff is happening. I look at this. This tells me a story here. Okay, we have this move. This is the origin of this move higher. This is a very good place to buy. Why? Because we were accumulating orders to do what? To move price higher here. Okay, so people were buying. These white candles here, they're telling me there's money exchanging hands. My broker we have something for sale. It's at a discount price. It's low. Buy. This is buying. People are loading the boat. We're buying. We're filling positions. How do we know? Because this happens. This is a very specific pattern. This is a 5-minute chart. You'll see this exact pattern on the monthly and on the 6-month and the yearly chart. I don't unfortunately have that kind of data, but it's the exact same stuff happening. So this is the origin of this move. What will happen when price comes down here is about a 90% chance that we're going to have a bounce when price comes back here. And the higher we have this area of parent demand, this is apparent because why? Because we have this child that was formed above it. And this is a child because the formation of this area of demand is a result of its reaction to this. So this is stronger, this is weaker. So buying here would not necessarily be a good one. Buying here would be better. Buying here would be best. And this you're seeing on all of the time frames. All of the time frames.
So is it a little bit about knowing when that jump's
luckily, some people will argue yes, but I argue absolutely not. Because, I mean every day, all day long, there are economic data releases entering the market. BNP for one country, PPI for another country. So there are numbers coming out all the time that are telling investors, the health of an economy. And this will give people either confidence or it will shake them of their confidence, and then they will not invest in the human economy. And so every time this new piece of information jumps into the market, you'll see it. You'll see like it went up. And this is typically called a breakout, and this is a strategy of breakout trading. And it is the best way in the world to lose money, because people, they're trying to predict this. They're saying, okay, it's doing this. I'm going to buy here. You don't know. You don't know if it's going to be a positive number or a negative number. And even if you knew if it was going to be positive, you shouldn't buy, because that might not be what the central bank is focusing on. Maybe they're focusing on unemployment claims or something that is not related to to PPI, for example. Okay, it's very interesting, and luckily you don't have to guess. You can wait. It's telling me, this is a story. When I see this, this tells me to sit in my hands, wait until you see a sign that people are buying.
Because the micro movements can be just shoved around by the macro releases?
Yes. I mean, just prior to like a fundamental data release, liquidity dries up, meaning that people pull their orders out of the market because they don't know what's going to happen. And this creates incredible volatility in the market, because essentially price will keep moving higher until it finds a sell order, and it'll keep moving lower until it finds a buy order. And so in front of big data releases like the one by the Fed here last week, trying to make sense of that is a really, really bad idea. And so liquidity dries up, investors are saying, well, we're going to sit back and we're going to watch the fireworks show, and then when it's over, then we'll reposition ourselves in accordance to the data that has been released, if the central banks are focusing on it. Does that answer your question, Mark? Yeah?
Can you define what is a broker?
Of course, a broker is a mediator of transactions. This is my broker's trading platform, and this is simply sending me a price feed that tells me what things cost. You can see all of these here. So I can see I have this is like the spot price. This is the buy price and the sell price for the the Australian dollar, American dollar. And so they're showing me what's for sale. These are the prices they're advertising. And when I say buy or sell, they take a small slice of that transaction in the form of a spread, which is the difference between these two numbers, 79.53, 79.52. So this is like to the 5th decimal point of a pip. The pip is like the smallest movement in the currency market. So it's a very, very small price. But on top of that, this broker, you're going to pay commissions, and they're also reasonable with this broker. And so that's what a broker is. He establishes a market where investors can engage in the financial markets. Yes, of course you can. I think I was trying to find if there. Yes, you can, but I've noticed that being here, a lot of some of the crypto stuff that I'm interested in and the financial markets, it's blocked. Or it's being blocked, so I have to run through a VPN in order to. Yeah, have you guys noticed that as well? Yeah, and so I don't know. Yeah, so maybe there are restrictions. I don't know. Hey, Jerome, can you switch that fan on just above your head? Nice, cheers. Yeah, so that's that bit of Yes. This one.
If you're looking to the variance of the price between the sell and the buy position is so small. Maybe like 0.0 something.
Yeah.
How then you can make money?
How you can make money? Well, the smaller it is, the better it is for us. The worse it is for the broker. But typically, a lot of brokers, they'll say we take zero spreads, which means the buy and the sell and the buy, they're the same price. But I mean, obviously they have to earn their money, and so they'll advertise low commissions. And so I think the going rate plus minus is about $6 to $7 per 100,000 units of a currency. And you can, if you have a $1 million account, you can probably get them down to $6 or $5 for a standard lot. But it's all negotiable. But the going rate is about $7. I've seen bad price. I've seen like $12 commissions on majors like the Euro US dollar, Japanese yen. So it can get expensive. So it requires you to do a bit of legwork to find a good broker who isn't necessarily out to get you. Cool. Okay, let's have a look here now. I mean, this is a question that most people want to know is, okay, should I be buying or should I be selling? When I sit in front of a chart, I have this question. I'm looking at an American dollar, Japanese yen, and I say, okay, am I going to be buying or am I going to be selling? And so you have to focus on what the major banks are doing. And to do this, you have to move away from the really attractive and the really exciting 1 minute, 5 minute, 15-minute charts where everything's moving really quick and woo, and it's exciting and your head's kind of blowing a bit, and you have to move up to the really big time frame so you can see where the big banks are positioning themselves. You can't see this on the 1 minute chart, and you're fooling yourself because you could see this. you could see this, and you think like, wow, price is going up, buy, buy, buy. But Goldman Sachs is selling 500 million just up here, and this is just the broker modifying price to push it higher to fill that really attractive sell order. So they're going to earn a boatload of cash, and so you'll be buying in vain. And so you have to pay attention to what's going on the bigger time frames. And we're going to come back to that and say, I'll leave it like this, it's maybe a little bit easier. And you do this by doing what I refer to as a supply and demand analysis, which is essentially the same as an analysis of the distribution of liquidity in a marketplace. So you can do that. This is my number one tool. That's like the first bullet in my shooter. And I rarely go below that. I rarely do currency strength analysis, which I'll do just to show you. And I'm not interested in fundamental data because, number one, I don't understand it. I have a very, very layman's understanding of it. I'm not an economist. It bores me. It's really complicated. There's a lot of lingo in there you have to come to terms with. And I would just rather put in my orders and walk away from the screen. I don't want to spend too much time in front of a computer. But we have supply and demand analysis, which I show, and we have currency strength, which is really fascinating as well. And I'll show an example of that as well. So, I mean, just if we look at this, we'll just use this as an example. So, what we need to do, what I always do is I start on the higher time frame. You don't have to go to the really big time frames. This is the monthly. So each bar is 1 month of trading. That's a pretty big one. They got to 6 months as well, 3 months, 6 months, and yearly. What we're doing here is, if you remember the move on the 1 minute chart, it was saying to buy. If you look at this, I mean, what's price doing here? Well, it's actually reaching the tops of these pokes higher. And what is this? Well, this is telling me that we have people who are keen. We have people who are selling in the market at this price here. And why? Well, this is because if you look here, we have the same thing being told on the monthly chart that we saw on the 5 minute chart, which was a very strong buy, and this is a very strong sell. So there are hundreds of millions of dollars of positions here located in this area they're going to sell. So people are going to be shorting, selling the American dollar. They're going to be liquidating their American dollars, and they're going to be buying into yens at this level. And this could be an area that was established because of a big deal, multinational deal. You don't really know it. We don't really have access to this information. But what you can see that people are interested in selling at this level. And you can do another analysis, the same analysis on a smaller time frame, and you can get a deeper insight into the details and the more precise levels located here. Because we have this level up here. This is my software that draws these levels here, the purple lines, blah blah blah. And you can see here we had a weekly area of supply. Price went to it once. So the software said to sell here. And this is the second time it went deeper, but notice that now it almost went through it. So what does that mean? Well, that means that the liquidity at that area, that level, has been consumed. And so there might not be a lot of people that are keen on selling at that level. So maybe there's a level that's higher, that's more attractive. Also notice that we have the lows that are getting higher. We want price to move above here, so in order for us to position ourselves very, very strong long or buy. Okay, so I start here and I look at this, and you can see here we have a lot of interest in selling here. So when price will come here on the smaller time frames, you could day trade that level all day long and probably do pretty well. But ideally you want to find out what's driving price, and you can see the most recently established area is this here. But this is not an independently established area of demand. This is a reaction to what? To this. Right here. So this, we had push, accumulation, white candles. So the white candles are telling us that price is fixing to do something. We don't know to do what? To move higher. Okay, so we have buyers here. And so this is where you position yourself. So we have a parent, we have a child. Don't do the child. It worked here a little bit. The price came into the parent, this is demand, this is a reaction to demand, and this is where price released from. So this is currently the area that is in play. We have this one as well here, but we want price to go beyond this level before we start selling. Also, we have interest rates in the US, they're good. Interest rates in Japan, they're bad. And so if you're selling this, you'll be hemorrhaging money every day when the server clocks tick over. So you have to be very, very mindful of that, because if you're trading hundreds of lots, it gets really expensive to hold positions while you're waiting to mature, because all your profits are eating in interest rates, negative interest rates.
Sorry, can I ask you something?
Yes, of course.
I have two questions. So if you trade in FX traders, are they mostly long or day traders? I mean, where is the most money? What is the distribution of these FX traders? That's one. And I actually would like to, I wasn't clear about what you are doing. So is your company designing or advising people, and how far are you advising, and how much are you charging?
Right. I'll get to the me bit afterwards. I have some really exciting projects that I'll share with you guys afterwards about that. But the first one, I don't know if there are any accurate details about that. You can see who the speculators are, and that's around the 18%. But I don't know if there are any additional details that break that down, because the FX market is decentralized, so there's no accurate volume information. So it's very difficult to have it.
I think what you were saying before is that if you don't really want to, be a day trader and
Right.
highs and lows,
Right.
it's really stressful.
Yeah, for sure.
Just chill and look at a bigger pattern.
Exactly.
Try to make money like that, right?
Yeah, I mean, I know, luckily you can choose something that suits your personality. I sometimes feel like a little bit like, whew, and then I'll go down to the smaller time frames. But other times, I'm focusing on interest rate differentials like this, and I'm positioning myself for longer term. So I'll hold those for maybe months until the central banks start interfering, adjusting interest rates, and these will be mirrored in these values here. So this is like swap long and swap short. So if I'm selling this, I'm paying about $7.50 a day per lot. So if I have 100 lots, that's $700 a day I'm bleeding as I'm waiting for my position to mature. And so this is something you'll pay attention to. In the old days, there was the ultimate carry trade was the Australian dollar and the Japanese yen. You would just buy it and hold it, and you would just wait for months or even years. And because the interest rate differential was so extreme that people were making very good money just holding these positions longer term. Okay, cool. So now we know what's going here. We have selling pressure up here, and we have buying pressure down here. We'll probably get a reaction down here. But if you look here, you can see that price went down. We have a white candle, two white candles. What does that mean? Well, that means on the smaller time frames, we have this going on here. So accumulating orders to do what? To move price higher. Why? Because this is a major turning point in the market. So we had a really strong move away. So we had a lot of interest in buying. So this is actually the market reacting to this pool of liquidity, which has ultimately driven price higher. Okay, and you can see we have like market structure, what I'll refer to as market structure failure, where we have these peaks that are going down like that. And typically you'll see that these will be respected. So when they're not respected, it means that there's some strength going on. And the strength of this move, or the origin of this move that has actually moved through this or broken the structure of market, originates from down here. So this would be an interesting place to look at should price move down. Okay, so you take this information with you on the smaller time frames. You go to the weekly chart, you have a look, see what's going on. Well, here you can see something else. You can see here that we have this daily area of supply. It's been tested, close, not quite. Price fed into it, and then price retraced to an opposing area of demand. And now price has filled these orders, it's moved off it. You see these white candles at around this area. Price leaves, that means that there's going to be some buying going on when price comes down here. Price went up, it came down. This wick low is telling us that the buy zone for this particular micro area of demand is from the low of the wick and lower. So this is an attractive price. This is the discount price of the American dollar, Japanese yen, from the low of this wick and down. The price is wriggling higher. This is not very interesting to me because it's not really doing anything. We do have these green candles, but the price is having, you can see it has a tough time moving higher. I mean, this is a hot knife moving through butter, and this is efficient trading where you have price moving higher and it's moving low. It's trading very efficiently. This is inefficient trading. This is inefficient liquidity distribution. This is relatively efficient liquidity distribution. So this shows me that the risk is to the upside, meaning if you're buying, then you might want to be a little bit careful, at least for the shorter term. But I'd expect price to kind of move down to reload the gun before it moves higher. So this is a kind of like an analysis that I like to do. I like to focus on these major swing points. And my software draws a lot of them, but I mean, with time you learn to see which ones are good and which ones are maybe false alarms that you should learn to stay away from. Okay, so let's have a look at another one. And this is the other one on the chart, which is a currency strength. And currency strength is really interesting. Come on. Currency strength, what it shows you some really interesting information. And the information that it's showing you is the difference in strength between the green currency, this is the American dollar, and the violet, which is the Japanese yen. So what it's doing, I wrote this software to just show me a lot of, graphically show me a lot of information without needing to have to look so much into the fundamental data. So what it's doing, it's looking at all these prices here, and it's running through all of them, and it's saying, is the American dollar a part of this symbol? Yes, 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 no, yes, no, yes, no. And it looks at 8 of the most traded currencies. So we have American dollar, British pound, Japanese yen, the Kiwi, the Aussie, Swiss franc, 6, Euro, and another one. I always get 7.
Norwegian kroner.
Norwegian kroner. The Turkish lira. And it's giving me an index. Normally you can, if you look online for currency index, you'll find the American dollar index, the USDX. It's like, it's kind of the king. But I mean, wouldn't it be nice to be able to see an index of the American dollar, Japanese yen, Euro, Aussie, blah 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 blah. And so I'm looking, instead of looking at 1/28th of the market, I'm looking at the entire market, because this is showing me very fundamental information, very solid information about the health of the American dollar in relation to the currency that I want to trade it against. And you can see they're spread and they're moving higher. That means that the currency strength of them is relatively equal, but they're moving higher, telling us that we're going to see this pair continue to appreciate for the near future. And so sometimes I like to look at this and on a higher time frame and say, okay, what's going on? Drag the pairs on the chart, what's going on, what's going on. When I see a nice split like this and a nice trend going on, and I'm going to look at supply and demand, which we looked at earlier, and I'm going to look for my little boxes. Okay, here we have a nice one. You see here we have the green candle, we have the white candle. That means we had an accumulation of orders to buy at this level. So when price comes back down to here, depending on what price has fed into here, we'll likely see price continue higher for the near term.
There's a point where they're very close.
Yeah.
And that seems that it's just right before that there's a big spike in the
yeah.
So they go up to go faster.
Yes.
Can you explain the correlation?
I mean, the correlation is, I mean, you can see that pretty nicely here, how we have price moved up, we moved pretty much sideways. I'll buy it a little bit higher. Then we had a pullback, and you can see that this pullback is a result of strengthening yen and not weakening American dollar. The American dollar remained persistent and strong. The Japanese yen got stronger, and so it's giving you insight into what it was. This was very likely an economic data release out of Japan that was positive, the Japanese yen. So we saw that instantaneous. This is good. Why? Because dollar yen traders are going to be looking to buy, but they're waiting until price. Sorry?
They're looking for buying yen.
They're buying the dollar with Japanese yen. So they're selling their yen and they're buying American dollar. And this is just a really good indication that price is having a pullback. Price is being advertised as being on kind of on sale, like televisions, you know. Special sale this week. Get your television for 20% off. This is maybe a percentage off. Super. So people are buying. The big banks are buying, and this you can see very, very clearly on this chart. It's a really interesting tool. I also use it for kind of scanning pairs. I did more so in the past, where if we have a look here. So if I go here and I have a look and I say, And here I can see what's strong and what's weak now. The Canadian dollar is on fire today. It is the winner. We have the American dollar, which is also good. But look, the rest of them are pretty, on the weaker side there, below this white line, which is the zero line. So we have, kind of look where they start. The British pound is the red one. You see it's going lower a little bit. It's just turning low. So wouldn't it be a good idea to buy the American dollar or the Canadian dollar against the, actually this is the pound, this is the Kiwi, which is brown. I chose brown because in New Zealand they have lots of cows. Cows eat grass. Grass grows in soil, which is brown. and so you can see that maybe it'd be a good idea to position yourself like shorter term, short the Kiwi, long the American dollar and the Canadian dollar. So what you would do is, you would go to you would find that symbol, Kiwi American dollar, and you would look to sell this. You can see already that it's starting to go down. So what you would do is you would find a nice area, like a discount price level, to sell this pair. And where do we have that? Well, we have something just here. Prices wriggle down. This is not a high probability trade, but this is a nice departure. On a smaller time frame, like the 15-minute or the 5-minute, there's probably going to be a very clear pattern to sell. I remember sitting down at lunch, probably just under 10 years ago, with a theoretical physicist at lunch at one of the biggest banks in the world. And this guy, I almost couldn't have a conversation with this guy because he was so clever and he was so in his head, but he was fascinating. He was unbelievable conversation. One of his theories was based in chaos theory and how, yeah, I don't even know what he said actually, but it was a crazy, my hair was blowing back, whoa dude, and I left there alive, even more alive. And so banks, they hire a lot of people with a lot of big brains, and they make crazy models based on typically fundamental data, also price, but a lot of fundamental data that's going to give them a slight edge in the market. And they employ loads of them, absolutely loads of them. It's fascinating. Okay, cool.
Do the banks work with each other? Do they communicate with each other? Do they work with each other?
I didn't really get in.
Almost competitive.
I mean, they are competing. There is a lot of cooperation, I think, but I mean, I didn't really have insight into that. But there is obviously, I think, a lot of cooperation. There's also compliance. How are you guys dealing with this? We're doing it this way. And so there's a lot of communication, lunches, stuff like that. But I think like the IP, the intellectual property, is that's kept in the top drawer. Yeah, they're not sharing that information. Okay, so why all this trouble? I mean, I wrote a lot of software to try and tell me what's going on, and it's been exciting. And so, I mean, why would you be interested in this? And this is kind of the question that I've moving into, and it is, what if you could, with a high degree of probability, because it is a game of probabilities trading, it's not about being right or being wrong, it's about being right most of the time. Tell which direction the market was most likely to go. I mean, that would be pretty exciting, wouldn't it? I think for a lot of people. So, I mean, for me, motivation is I wanted to find the answer to that question. You'd see price going up. I traded like, before I knew what I was doing, I traded a lot on demo accounts, and the price would go up, and I would buy, and it would go down, and I'd get stopped out. It's going down, I'll sell. Then it would go up, and I thought, what the hell is going on? I have no idea. And so you focus on this stuff. This is sell-side information. This is stuff that is inside the banks. They're not telling you about this stuff. This is interesting because it is actually what is making the market move higher and lower. It's very, very valuable information. If you go on the Google and you Google currency trading, forex trading, you'll see about, I don't know, let's say 20 million websites that are going to tell you how to win in the currency markets. And I guarantee if you follow their moving average or their Bollinger Bands or their RSI or stochastics or whatever, you'll probably lose money because most people are. And so I wanted to find an intelligent question and find the answer to it. The intelligent question being, what direction is the market going to go? And it's been challenging. I've been doing this now since 2010. And before I was doing this, I was doing computer stuff, and I was analyzing computer viruses, some of the most complicated computer viruses in the world that were stealing millions of dollars from a lot of the banks around the world who are our customers. And this stuff it absolutely dwarfs computer virus analysis. This is so difficult to get right. I mean, ask my wife, sometimes I'm sitting there, my mind is constantly going. She would have told me something. Did you hear that? Yeah, yeah. And now she's learned to say, okay, what did I just say to you? And I was a bit like, oh, guilty as charged. I wasn't listening, sorry. Yeah, and so I've written a lot of software, a lot of automated trading robots to help me kind of make ends, kind of help me understand what's going on. And I checked the other day, like the number of checkouts or check-ins of my software, and there are thousands of them. And a checkout is simply like I'm kind of uploading code to the server, you know. This is a major change, upload. Maybe this will do it, upload. I think there were like 1,900 checkouts on this one particular robot. And so it's like sometimes I want to give up, but I'm not giving up. And in a minute I'll show you why, because like that beautiful face of success kind of keeps like peeking. I get glimpses of it. Yes, there it is. And sometimes it'll lose me. It's fascinating. And so I'm not ready to give up just yet. Cool. Okay, so what am I focusing on at the moment? Well, I mean, my software, my discretionary tools, and my algo tools, they are focusing on liquidity distribution, which is what I learned when I sat in the banks. And so this is essentially converted in my mind to supply and demand and currency strength. So these are the things that I focus on. I focused a lot of this in the past. I made some algo traders, which are cool. I made those tools, which are also cool. But essentially, I mean, this is the intelligent. This is kind of the sign that's pointing you to the direction that is probably best going to help answer this question, at least from a technical analysis perspective. So the projects I'm doing on is I'm working on these discretionary and quantitative tools, analysis tools. My discretionary tools have been in production for about 8 years, and those I don't have to demo. This is the stuff that I showed drawing the rectangles. Let me show you quickly. Just remove this here. It's just showing me what I should be doing in the market based on liquidity. It's telling me that I should have sold here when price came up here. And this box was drawn on there. 1, 2, 3, 4, 5, 6, 7. Actually, 1, 2, 3, 4, 5, 6. On the close of this blue candle here, with the white dot in it, this box was drawn. So it told me, I don't know, a couple of days in advance that once price came here, I should be selling. And the same here, this box, the big red one, this is a daily. They're color coded because I'm a little bit visual, and so I like to know what's going on. So the red one tells me it's daily supply, the blue one tells me it's 4 hour supply, and the white one is hourly supply. So everything is is color coded to make it easier for me to get. And so there we have these. We have an hourly, a couple of hourly areas of supply, but here you can essentially see that these rectangles are above price, which means we have supply forming above price, consuming demand here, here, in here somewhere, in here, here, and here, and here. Okay, so these have all been consumed by the opposing order flows, which is to the downside. So this is just like discretionary tools, you know, like trying to find a way to do it. This is if you kind of want to do it manually. But the fun stuff, that is the algo trading project that I've been working on for a very, very long time. And I think a long time because initially my focus was currency strength, which is fascinating. And I'm not done with that project yet, but I have to do this, get the supply and demand, liquidity distribution model done first. But it was very exciting, very, very exciting. And it was doing good. It was running for about a year and a half, and it did about 30% returns in a year and a half. So that's pretty decent returns. Yeah, very good. And that's pretty stable. But it had some, yeah, there were challenges. So now I'm focusing on supply and demand trading via an analysis. Actually, the engine of the algo trader is actually the exact same engine from the discretionary tools. So instead of drawing rectangles, it's issuing signals saying buy, sell at this level, stuff like that. Brilliant.
Is that almost like you say it's a couple of days behind the box, a couple of days after?
No, a couple of days before.
Before?
Yeah, so it's like it's a before the fact. Yeah, absolutely. So it's putting orders in the market sometimes days before price even gets there, which is nice. Obviously. Yeah. So I mean, my goals for the project is I want to move my current robot to production, and I'm currently fighting with laziness and procrastination because I have to port my discretionary tools to a new trading platform, and that's kind of a daunting task to have to rewrite thousands of lines of code for a new platform, which I was complaining about one morning here. But I'll do it. I've already started, so I've got to get it right. Okay, so if we have a look here, just like at some results here. This is kind of where I am at the moment. This is one of okay, I wanted to make, oh, look at the smoke. Just above here, you can see here. But Koji's not here.
Yeah, Koji's not here.
Yeah. Okay, so we have a, shall I wrap up?
No, I mean, so for those, so it's around 11, so for those who have another things to do and they want to leave, feel free to leave now. I mean, Sarid, you can keep on.
Yeah.
Just want to make, you know, anyone comfortable that has another arrangement that you can leave.
Yeah, of course.
No problem, yeah?
So this robot has been running for about almost 3 months, and it's done 40% in 3 months, which is really good, with virtually no drawdown. You can see we had under a 1% drawdown, which is unbelievable. You can see short positions won at 96, over 96%, long positions 94%, and so it's good. There are some statistics I'm not pleased about, like average profit trade $1.22, lost trade $2.50. Those are statistics that I'm comfortable with because it's winning almost all the time. But ideally, this has to be a number that's bigger than this one. And the reason the curve is flat and going up is because it's a tiny account. I want to test it on a small account because it's the bigger the account, the more equity I have in the account, the bigger the volume. And so it's looking at that, and it's opening positions based on how much money I have in my account. And I don't have a lot of money in my account, so it's linear. And so this is pretty high risk down here, and the more money we get in the account, the lower the risk. So this is, yeah, kind of low risk, high risk, and then we're going down to low risk because there's more cash in the account. But the position sizes are the same. This is trading micro lots, so 1,000 units of currency, which is not a lot at all, as you can see here. And I put it on a bigger account, and this is what it looks like. This is the beauty of compounding, where we have the account started small, and so it was linear, and then the position, we had enough equity in the account, and so it started to increase the position sizes, and so it's risking 0.1% per trade. So it opened 0.1% here, which isn't a lot. You go up and up and up and up and up. And so, okay, now we have quite a lot of money in there, so we can open bigger positions. And you can see that very, very clearly here, in obviously how this the equity curve has gone up. We have good stats here. I mean, 97.5% short positions won, 99.29% long positions won. It's lost 2 trades in a row. It's won 111 trades in a row. And we have again the statistics: average profit trade 200, average lost trade 238. It's getting closer here. Yeah, so it's looking.
If you win a trade, mean that you buy it and then the next day or the next hour it goes up, or what defines a win or a loss?
Yeah, well, so you open a position. You have a bias to either buy or sell. If you think it's going to go up, you buy. You wait till it goes up and you sell. So you don't get the physical currency. Yeah, and so you essentially subtract the winning price or the close price from the win price, and that's what you get in your pocket minus expenses. So it's looking really, really good.
What's it called that you deal with? What's it called? Not Bitcoin, but what is it? The currency?
I mean, they can be any currency. I trade about 28 different currency pairs. Yeah, so all combinations of the American dollar, the British pound, the euro, Canadian dollar, and so those 8 currencies cross results in 28 different instruments that you can trade. But some are better than others. The euro American dollar is very, very liquid, and so price is a little bit more smooth. If you go to the Kiwi Swiss franc, it's less liquidity, not so many people trading, and so you have these kind of erratic liquidity voids jumping up all over the place, which makes it a little bit kind of scary for a lot of people.
So this is something that you
I'll just
the robot does it for you, or you have to keep an eye on it and do it?
Theoretically, it can do it for me, but I don't leave it. I don't switch it on and walk away. Yeah, I mean, I have now the update on iPhone. kind of tells you how many times you look at the screen, and it's I look at my screen a lot, just keeping an eye on it. But I don't let it use it. Before, it used to run on like a virtual private server. It was running all the time. But now I don't do that. I let it run here. I let the robot open the trades, and then I kind of watch them on my telephone. Okay, how are we doing? What's going on? And then all the orders are set to expire after a number of hours, about 20 hours, 21 hours, like before the period of 1 day.
So you can't get burned by an old order getting filled.
No, it doesn't do that. And so it closes all the orders. The next day I come in, all the orders, the pendings are cleared out, and I turn it on, it redoes the analysis, opens the trays, and then they're set for another, just under a day.
So you pick specific times of the day that you do this?
No, I mean I do it in the morning here. When I come in the morning, I sit down at the bridge and I switch it on. It analyzes the markets. There's some criteria, so not all of them will be qualified. It's only opening positions where it's going to earn interest rates. It's not going to buy the Euro USD, because if the position is kept open an extended period of time, then I'm going to be bleeding profits, which I don't want. So there are some criteria, and it opens the trades that meet those criteria, and it leaves them open for a specific number of hours before they expire. Yeah. Any questions? Any other questions about it? It's super exciting. It's really, really exciting. Obviously, it doesn't yet. But if you have any, ideas.
Sorry, I found some companies offering to sell this kind of robots.
Yeah.
I got some offers,
Of course.
friends. What do you think about it? Because for me, it sounds like why they should be selling a robot that is supposed to be making so much money and not keeping it for themselves.
Of course.
I just don't trust that it's real, that it's working. What is your opinion on that?
Unfortunately, the retail foreign exchange is a bit of a tainted market, because a lot of people view it as a really good way to get really rich. And if you guys remember the Swiss franc, the Swiss central bank, when Chairman Jordan decided to pull the plug, he said it's too expensive, we can't keep buying euros. I mean, it went down like crazy. So a lot of people either lost a ton of money or they made a ton of money. And so a lot of people will go around, the people who won, they go around and they talk about how much money they earned, and it's a very, very tainted market. So I would be super, 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 super careful about putting any money in anything other than maybe something you have a very good understanding of. Yeah, very much so. Hmm.
154 to 103 practically overnight.
Yeah.
People have taken notice of Swiss franc because of suddenly increased in value of trade.
Yeah, a lot of people lost their shirts.
There was a lot of Norwegians also.
40% overnight.
Exactly.
A lot of Norwegians changed their mortgages
Yeah.
to Swiss francs.
Oh, Jesus.
40%
Yeah.
overnight.
Yeah, that's crazy, huh?
And they have to repay a mortgage 40% more than before.
Yeah. It's
So this is the type of business that you really, really know what you're doing, like being like you, in order to actually make some money, or is it an option to invest with you?
No, I mean, I don't want anyone's money. It's nothing. I'm not here saying I want anyone's money. I don't want money. I just want. This is an exciting for me. It's a project. I absolutely love it. I think about it when I'm laying in bed at night, and so it's just something that really floats my boat, and I just want to share that. But I don't invest anyone's money, and I don't think I ever will. I tried that, and I didn't like it at all.
Then you become a broker, right?
No, other people's expectations. Hey man, why didn't you hold on to that order longer? It would have earned a ton of money. It's been like, I can't do that. I'm not very good at that.
One of the things about this is, of course, also it's working properly all the time, because you see some opportunity with a certain movement, but somebody else next week sees the same, and suddenly the movements are no longer as they were a week ago. And
Right.
I think this is one of the things with the stock market, with the currency market. It's a constant working progress.
Totally.
Catch up.
Yeah, but it's constantly evolving as well. I mean, the Australian dollar, the Japanese yen has a personality that is very, very different than the euro, American dollar. The dollar yen cross and the the dollar, Canadian dollar, they have two completely different personalities. The British pound, American dollar, has its own personality. So it's like having 5 people in the room and kind of engaging with those people, and like they feel different, you know, and these have they have personalities, all of these, and there are a lot of them. And so that's a lot of friends to get comfortable with, you know, before you can have those really deep conversations with them. Deep as in that you understand them, so that you can siphon money out of it. So it takes time.
The relationship starts to mirror the relationship between whoever's the personalities of the president or the prime ministers are of those countries as well. You see,
Yeah.
you see the relationship.
You can. Japan is notorious for saying things that negatively affect the Japanese yen. Of course, they want to dump the yen because a really strong yen is very, very bad for exports. And so they call it jawboning in the industry. And so he'll have some exactly. And so I mean some central bankers are notorious for saying stuff. And so you have to be very, very careful. And so that's something I'm aware of with the Japanese yen. And so, I mean, holding positions over the weekend is maybe just something you want to consider. Yeah, but yeah, they all have different personalities, which lengthy study. Some people spend their careers studying 1 or 2 currency pairs. It's not something you can't walk in and say, cool man, I want to be a currency trader, and you start clicking over orders. It won't happen, and I don't recommend it. I recommend that you try it on a demo account for half a year, just to get into it. But you have to spend hours learning it. When I quit my job, almost lost our home. It was, despite from it being terribly horrible, I learned a lot during that 6-month period because I was stuck in front of the computer for 10 hours every day, looking at price and how price moved. I was trying to write this software. I tried to get the software finished so we can start earning money. I was dying of stress, but I had so much chart time, so much time to invest in understanding what makes price move that I would almost have lost our home just to have. No, I wouldn't. Okay, it was a good investment. Yeah, it was a good.
Wife is in the room.
It was a very good investment, I think. Yeah, that not getting salary for half a year was a very good investment, I think.
There are some currency ETFs or FX ETFs. Do you know anything about them?
No, I mean, people are always making kind of hybrids of different things. You have this crypto, the crypto sphere. Everyone wants to get crypto. Everyone wanted to get into crypto until it dumped and everyone lost their money. And so there was a race to get Bitcoin on central exchanges, to get Bitcoin out of this decentralized market and put it in a centralized, to create liquidity that you could channel to brokers like this. So it became centralized, as in they were buying liquidity that could be kind of represented on my chart. And so a lot of people are always trying to make these new, different, attractive instruments that people invest in. I don't understand them, all these derivatives and options and forwards and puts, and I don't get any of that crap, and I don't want to get it. I think if you want to get into it, you have to make it as simple as possible. It's just like software engineering, you know. You have a huge problem, you know. You have this thing, you know. You have this huge problem area like that. And you're like, damn it, this is like a huge problem for me. And so you could like focus on all of it, which would be focusing on all of those, or you can become an expert at this. And this is the only thing that you focus on for a few months. It can be a pair, it can be an index, a mutual fund, whatever it is that you want to trade, and you get really, really, really good at that. And you will get tremendous insight from having invested an enormous amount of time and the cognitive energy in understanding what this is. And then you choose something else. And the cool thing about doing this is, because you know so much about this, there will almost always be spillover. The knowledge from here, you'll be able to create associations with this new thing that you want to know something about, and then you'll get good at this. And by the time you've mastered this, you'll be really good at that. And the same thing keeps going, it keeps going like that. And before you know it, you've cut the elephant into very, very small bite-sized pieces, and you've essentially eaten the elephant. And so I think that's what you want to evolve to. I mean, there's so many instruments available, there's so many things that you can invest in. I only get a piece, and I don't give a crap about all this here. If I tried to jump in here I would confuse myself and I would get stressed out. So I'm only interested in this little piece, and that's all you have to, I think, become an expert at one thing, do it very, very well. And I think that's totally the best strategy. Any other questions?
Have you ever been looking at the Euro Czech crown pair?
I haven't. Because it's expensive. I was looking into.
Expensive what?
Okay, sometimes I
fees?
can't.
The fees?
Yeah, the fees can be, the
Okay.
spreads can be very, very big. On the exotic, it's an exotic currency, so sometimes commissions and spreads are really big. So you open a position and you already.
I would be really
minus-
curious, to see what your analysts are saying, because I'm an economist, and the
Oh,
exchange
cool.
rate,
So you-
exchange rate moves
Yeah, of course.
like illogical
Really?
from economic point of view. So
Okay.
maybe in your
Yeah.
charts there will be some
Let's see if I have it.
some explanation what's going to happen.
It's going to be. Okay, should we have any more questions before we do that, or is anyone?
No, it's fascinating to. I didn't understand like 10%,
You're gonna-
but it's fascinating to listen to you. And I was
Cool.
thinking like, could you make it a computer game? Because maybe
I can give you a
children
controller.
and parents, and I thought this is a computer game. It's
For
very
sure.
interesting to
Cool,
listen.
man. I'm very, very pleased you think so. I think so too. Any other questions? Is that it?
I mean, Sarid is here every day, so he's one of the bridge members and one of the
Right.
most present bridge members. He sits beside me on a daily basis, so please, I mean, I'm sure that he's happy.